I love this shirt. Bitcoin to the moon! This is exciting. I'm so excited because the stock to flow model, which I talked about in a few previous videos, is still on track to accurately predict the price of Bitcoin. So stick around because the next few months are about to get crazy and we're about to see some fireworks. And in today's video, I want to talk about all the things that will help get us there because so far, analysts are unanimously agreeing that before the end of the year, the price of each Bitcoin should reach at least $100,000, which is insane. And that's just the start because the estimates get crazier from here. So a lot of things happened this week, like the 2 new ETFs that we got. We'll talk about what they are and what it means and if you should buy them. We'll talk about all of the catalysts that have helped get us here, like PIMCO, for example, which is a huge asset manager with $2.2 trillion of assets under management, who just announced that they've started to get into crypto. Walmart has finally quietly entered the crypto game, and they're now hosting Bitcoin ATMs where you can actually go in and buy Bitcoin. See the little sign right here? It says buy Bitcoin with cash here. This is crazy. We also have the Houston Pension Fund that's supposed to pay for firefighters in retirement. They have a $5 billion pension fund that they put in $25 million to buy Bitcoin and Ethereum, which yes, is very small in relation to how much money that is, but it's still so cool to see that big money is finally entering crypto. We also have Facebook partnering up with Coinbase to bring their new wallet, which means pretty soon we could be sending crypto to each other on Facebook. Also, Facebook is trying to change its name. What's the matter, guys? I'm not Facebook, I'm Bookface. So ultimately the question is, to anyone left not investing in Bitcoin, do you want to end up like this guy who sold his Bitcoin in July and missed out on a 200% return? Hopefully not. So if you clicked on this video and you watch it all the way through, I can convince you not to do that because this is just the start. It's about to get exciting. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the non-crypto crypto channel. Let's talk about Bitcoin's price because the market cap of Bitcoin has reached $1.2 trillion, which means we are oh so close to surpassing the entire market cap of silver at $1.375 trillion. But how did we get here if Bitcoin is such a scam? Bitcoin's a scam. No, wait, the price is going up though. Wait, you're right, it is going up. Oh, it crashed. See, I told you it was a scam. I knew it all along. No, wait, is it though? The price is going up, look. Wait, so it's not a scam? Well, shut up and take my money then. Wait. Man, it crashed again. See, I knew it. Man, wait a minute. It's back. That is Bitcoin in a nutshell. We're still arguing over this thing, and we live in a time where most people don't own any Bitcoin at all. So let me just show you this chart right here, and I apologize in advance because I don't know complicated chart and technical analysis, but I will say that it does go up, it does go down, it's red and green and side to side, and it looks like a bullish chart pattern. Credits to whoever posted that picture on Twitter, but jokes aside, there is one chart pattern that my simple brain can actually follow and understand, and that is the stock to flow model. Now, the stock to flow model looks at finite limited resources like gold, diamonds, and silver and other commodities, and we use it to try to somewhat accurately predict the price of that commodity sometime in the future. Someone then took that stock to flow model and applied it to Bitcoin. Now, just a quick refresher, the stock to flow model just looks at the stock, which is the amount of something in existence, and compares it to the flow, which is the rate at which we create or produce or find that something. Now, this is not magic, it's not sorcery, it's actually really straightforward and simple, which is what makes it so good. The stock to flow model for Bitcoin has been extremely close in following its price, and according to this chart, we're on the verge of something really big about to happen. One of the biggest reasons why Bitcoin has been accelerating in value is because of its narrative. You see, everyone loves a good story. That's why YouTube channels in the finance space, YouTube channels like mine, have done so well these past few years. It's not necessarily because I might be good at editing videos or because my audio's crispy. Right now, money is on everyone's mind. The story that we talk about today is how the government is still uncontrollably printing a ton of money. This quantitative easing process. Oh, things are becoming unaffordable? Print money. Unemployment rate high? Print money. Rona? Print money. OMI releases a new drop?
Print money, but too bad you're still not quick enough.
You get the idea. Whenever there's a problem, the government will step in and fix the problem by changing some numbers on a balance sheet, which allows them to use that money to buy up bonds and corporate debt and other assets, which incentivizes people with money to take more risk with their money by investing it. This also allows the Fed to basically pick the winner of this game as an unintended consequence. But all of this has the effect of asset inflation, which we hear about all the time, about how inflation is so bad. But it's actually not so bad if you're somebody who already owns stocks and real estate and crypto, because the value of your net worth is going up. But just like a really cheesy bad magic trick, it's all an illusion, because I actually dropped the coin under the frame and now it's no longer in my hands. But the truth is, what's actually going on is now there are more dollars in the system competing for the same amount of stuff. So it's not that your net worth is going up, it's just that it's taking more of these little dollars to buy up the stuff that's already there to begin with. Again, great if you already have that stuff, but not so great if you don't, because you get priced out. So this narrative, this story of money, is extremely persistent. Virtually all the major news publications, article after article, are talking about how inflation is actually here to stay for a lot longer than we think because of potential supply chain issues. Even people like Paul Tudor Jones, one of the most respected hedge fund managers on Wall Street, who successfully predicted the stock market crash of 1987, says that inflation this time around is the worst thing he's seen in his entire lifetime. And look, these are real effects. These aren't just talking points that we talk about on YouTube. Our parents, for example, when they were growing up and they were taught to invest, if they were ever even taught to invest, mine weren't, they didn't learn through YouTube. They learned through old books that told them to invest 60% of their money into stocks and the other 40% into bonds. Now, that allocation, that spread today means they would be losing money to inflation. So you have two options. Either wait for the government to do something about it, which is to increase interest rates and slow the economy down, which they said that they don't want to do until at least the year 2023, or invest differently. Now, for some people, that means putting 100% of their money into stocks, which means you would outpace inflation. And for some people, that means putting their money into Bitcoin, which is why some people are calling it the fastest horse in the race, because it is the best thing against inflation. And that horse is actually about to get even faster, because we finally got a Bitcoin ETF. There's actually two Bitcoin ETFs that came out this week, which is Valkyrie's BTFD, which I think is the most creative ticker symbol I've ever heard of, and ProShares Bitcoin Strategy ETF, ticker symbol BITO. Like Ditto, but Bitto. And now you can buy it using your favorite brokerage.
Oh, Andre, you still use Robinhood? What's wrong with you?
Yes, I do. Leave Brittany alone. So this, by the way, is not a pure Bitcoin ETF. This is not the big ETF we all wanted, but when it launched, it became the most popular ETF on the market with close to $1 billion worth of volume. This is actually a futures-based ETF, and here's what that means. That means that whenever you buy this ETF, what you're essentially buying is a bundle of futures contracts, which represent your commitment to buy the underlying asset sometime in the future when the contract expires. These investments are then bundled up into little investments you can trade as stocks in the open market a la ETF style. See, this stuff is super easy to understand. None of it is complicated. I understood all that completely. But it gets even more complicated because I recently learned that futures trade in something called backwardation or contango. ¿Qué? Would you like to contango? No, it's not actually a Spanish dance. Here's what it means. Contango is where the future price is higher than the spot price. This is where most future investments are. They're in contango. And backwardation is when the price of the futures contract is lower than the spot price, aka the price of whatever it's tracking, which in this case is Bitcoin. Backwardation is a bearish sentiment. It means people are expecting the price to go down over time. And contango is the opposite of that. People buy this with the expectation that it will go up over time. Now, if you buy this asset in contango phase, that means technically you're buying it at a premium in relation to the spot price. You're buying Bitcoin at overvalued prices. Instead, you want to buy it when it's in backwardation, when people are expecting it to go down because you might get a better price. Now, one thing you have to understand is that if you buy this ETF and Bitcoin's price goes up, the value of the ETF itself could actually go in the opposite direction. So if all of this is way too confusing, up is down and down is up, price goes up but it's going down, it is really really confusing. So just understand that at the end of the day, futures contracts are not at all representative in this case of Bitcoin's price in real time. So then the question becomes, well, why was it created? Who is it for? And should I buy the stonk? The short answer is no. The long answer is probably also no. You're better off buying Bitcoin directly. So who is this for, huh? This is for anyone who likes to trade Bitcoin, like the day traders who like to speculate on what the price might be day to day, because now you can actually use your favorite brokerage and play with options. And this means you can actually leverage your money and trade it that way, which means technically you are now using borrowed money to trade on an asset that isn't really the asset, it's a derivative of one of the most volatile assets in the world. What could go wrong? It's perfect. Jokes aside, if you are somebody who wants to own Bitcoin stock and you don't want to learn about Bitcoin, that's perfectly fine, but this ETF is not it. This is because the expense ratio is extremely high, almost 1%, 0.95%, which means for every $100 you have invested in this ETF, you're gonna pay out of pocket 95 cents, which does not sound like a lot, but I promise over time, that compound interest adds up. So I would wait for the spot ETF, which holds the underlying asset, otherwise you could end up losing a lot of money. The other reason this was created and approved was so that our Congress could understand and invest inside of crypto without understanding crypto. This is the futures market, which has been around forever. They understand that, and that's why they have it regulated. But Bitcoin and crypto is not regulated, so it's kind of an interesting workaround. The real downside to this ETF is that maybe grandpa and grandma, maybe a lot of not so sophisticated money is gonna end up buying and investing in this ETF thinking that they have the real thing, when in reality they don't. Hopefully that doesn't end up happening, which is why I hope this video gets shared. But the upside to this ETF is that it paves the way for the eventual creation of the real spot ETF. Wait, what happened? Breaking news, Russia is now considering getting into crypto as well. In Soviet Russia, Bitcoin mind you. Vladimir Putin, the president of Russia, has said that crypto has value and that he deems it as an acceptable form of payment, which is really interesting. So now let's talk about everyone's favorite part, the price. Predicting the price of Bitcoin is like famous last words. It never ends well, but in the spirit of keeping things fun, let's just yeet something out there. The most accurate and most importantly, reliable price predictor that I was able to find is based on Plan B's stock to flow model. And in his worst case scenario, the price of each Bitcoin by the end of December will be worth $135,000, which is insane. That is 2x from today's prices. I challenge anyone to find me a stock or a piece of real estate that will 2x in the next 2 to 3 months. Now, the next best case scenario is each Bitcoin be worth $288,000. But the best case scenario, according to Plan B's stock to flow, is $450,000. This does not sound real, but it could end up happening, again, based on the scarcity and based on the supply and based on the demand. Now, if that were to happen, my Bitcoin position would go up to $3.6 million, at which point I will immediately settle down, not sell. Instead of selling it and getting hit with taxes, what people end up doing is they borrow against those assets at a lower interest rate than the interest rate that the asset generates. And while they borrow against those assets, that's the money they use to live off and pay for their lifestyle. That's how wealth is controlled in a very tight, small-knit group. Now, there's also one last reason why I think Bitcoin is gonna go so high, and here's what it is. Believe it or not, about 85% of Bitcoin's entire circulating supply hasn't moved in the last 3 months. This is because people are becoming smarter and they're hodling a lot longer. This creates illiquidity in the market because there's not enough Bitcoin to go around. And when you combine that with a spot Bitcoin ETF, this will create a huge amount of demand. And because there's not enough supply, the price will skyrocket. And this could last a few days. When you combine that with the fact that at any minute, Tesla will start accepting Bitcoin, Papa Elon will pump it on his Twitter, combine that with countries FOMOing, with hedge funds FOMOing, with pension funds buying, and you have a perfect storm that perfectly coincides with the stock to flow model's time frame. Is it gonna play out exactly in that way? No, it might not, especially if Congress decides to fight Bitcoin. But ever since China banned Bitcoin, the US has become the #1 country in the world by hash rate. And this means we have every incentive in the world to get this one right. Don't try to time the market, continue to dollar cost average in, and I promise you'll do great. But if there's one thing I can convince you to do besides getting up to $250 worth of free Bitcoin at this BlockFi link right here, getting 2 free stocks with the link down below from Webull, and signing up to my Patreon, it's to go check out this 2-hour-long video that talks about Bitcoin. If you're a money nerd, it's gonna keep you at the edge of your seat, and if you're not a nerd, I promise it'll make you one. It talks about what is money, what is the purpose of it, who created it, who controls it, and what Bitcoin is, and I promise you, it is not what you think. It is very meta, and it's gonna blow your mind. Seriously, check it out. In the meantime, don't forget to have a great rest of your day. Smash the like button, subscribe if you haven't already, and I will see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.